married people pay less taxes in most cases. Hello everybody, my name is Dino and welcome to another video. In today's video, we're going to be talking about taxation between married and single people. We are going to compare a taxation of single and married people in California, Texas, and New York. And before we start, please consider subscribing and liking the video because it really helps the channel. Let's get into it. So the idea of giving tax benefits to married people starts somewhere after Second World War, where government started stipulating family as a unit. One of the many reasons is because married people are way more likely to have kids, which calls for more consumption, calls for more work, which means paying more taxes. Again, that unit, that human being that people create will be subject to taxation for the next 70 to 80 years. Even though that human being might not work for the first 18 years of its life, it will still pay at least sales tax because it needs to breed, it needs to eat. So it's some type of short-term loss for a long-term gain. Government gives you a little bit of tax breaks, so you create something that will gain more taxes than they ever gave you in those breaks. So let's see how do those numbers look like, and we're going to compare $100,000 salary a year and $1 million salary a year. We're going to compare 3 states, California, Texas, and New York. And the reason being is California has one of the highest state income taxes in the nation. Texas is one of those states that has no state income tax. And New York is also one of those states that has one of the highest state income taxes, but it's not as high as in California. So let's get into the numbers. So in California, a single person on $100,000 is going to take home around $68,000, and a married person is going to take home around $78,000, so there's $10,000 difference. In Texas, the state where there's no state income tax, along with 8 other states, person is going to take home $76,000 and married $83,000. And in New York, single person is going to take $70,000 and married person is going to take $77,500. That is the analysis on $100,000 a year. What happens with $1 million is in California, a single person is going to take home $518,000, while married person is going to take $565,000. In Texas, single person is going to take home $638,000, while married $670,000. In New York, single person is going to take home $565,000, while married $596,000. If we compare the differences between single and married taxation, even though California has one of the highest state income taxes in the nation, California also incentivizes marriage more than any other state. Difference in taxation between single and married person in $100,000 a year is $10,000 in California, where in Texas the difference is $7,000, which is the same in New York. And on $1 million salary, the incentive is also higher than in other 2 states. So should you get married or not, it's totally up to you. Just keep in mind that in most cases comes with tax benefits. If there's any of you out there that noticed a difference when they got married in their paycheck, what is the difference? What happened with your paychecks? I would like to know down in the comments below. And as always, if you like the video, press like button, leave a comment and subscribe because it really helps the channel, and I'll see you in the next one. Bye bye.